Great. So I have to start again. Yeah, so remember we are talking about what here? Lecture number 6. So lecture number 6 is all about audit planning, audit risks, audit plan, strategy, and fraud. Now, remember, this is quite a lot of repetition from the earlier lecture. So as auditors, we recognize that our responsibility, our control lies primarily in managing detection risk, which is why our focus is on it. The extent of detection risk is controlled by the amount of audit work performed. Listen, we have 3 types of audit risk. We have inherent risk, we have control risk, which in this case here are beyond our control. Those are firm-based, all right? And then we have now here detection risk, which basically is what you can play around with as auditors. So we are saying here, if the overall audit risk needs to be kept low, especially when inherent risk and control risk are high, then the detection risk must be kept low. Remember what we explained. If inherent risk, control risk are up there in the heavens, then I have to do a lot of work. Detection procedures must be very high. I have to do a lot of work to balance, to try to bring this down. I have to do a lot of work myself, all right? And how do I do a lot of work? It means that the detection risk will be low. When I do a lot of work myself in terms of the procedures I put down, then the detection risk reduces. So whenever, ladies and gentlemen, I'm repeating here that whenever the inherent and control risk are way up there, then there is danger. Whenever there is danger, I have to do a lot of work to reduce my risk of making mistakes. So the detection risk will be low. That's what we learned. Now, ladies and gentlemen, the other thing you're supposed to be appreciating here is that conversely, if inherent and control risks are low, yeah, then detection risk can be allowed to be higher, yeah, meaning fewer procedures may suffice. So we are saying here we go and get a firm that is functioning very well. It has strong internal controls and it's in a good industry which does not have lots of risks. So if inherent and control risks are low here, then as an auditor, I will not be able to do a lot of work. As an auditor, then I will be allowed here to jog around with my increasing my detection risk. So I increase my detection risk. Increasing means what here? Doing little work. Yeah, doing little work, working with small samples, less than 30. When N is less than 30, that's a small sample. So I'll be picking a few vouchers, I audit them. I don't have to get into substantive tests. So meaning that I will be able to do very little work in this organization. I need to know how to balance the two because ultimately I would want the overall audit risk to be balanced. And how do I balance it? When this inherent risk, control risk are very high, then my detection risk will be low. So when the 3 are added, balance. When my inherent risk and control risk are down here, then my detection risk should be able to push up a little bit. Yeah, it doesn't have to be very high, but it has to push a little bit, perhaps around their medium, for me to have the overall audit risk being balanced. Because detection risk is the only component we can influence directly, we manage it by carefully designing our audit procedures and determining what we call NTE, nature, timing, and extent of work required. So at this juncture, we must be able to study what we call audit planning. When we are doing audit planning, we are required here to come up with 2 great documents, an audit strategy and an audit detailed plan, or a detailed audit plan. Yeah, remember I told you from the word go that audit is a project. A project has got the planning phase, execution phase, and then we have, in this case here, reporting. So now we are doing the planning phase, and we are saying that at the planning phase, the outcome will be 2 great reports, 2 great documents. We have what we call an audit strategy document, and then we have a detailed audit plan document. So what is this audit strategy? Audit strategy, ladies and gentlemen, is basically a document which provides overall direction for the audit. Overall direction for the audit. It outlines what somebody told me. If you have been to hostel, you know we have what we call EN and T specialists. EN and T specialists. So whenever you hear of an audit strategy, remember that hostel. We have an ear, nose, throat specialist. And then we have, in this case here, a doctor who looks at these STDs, sexually transmitted diseases. Yeah, whenever we talk of, ladies and gentlemen, audit strategy, always remember those acronyms, ENT, and then we have STD. What do they stand for? So we have this NTE stands for nature, timing, and the extent of the audit work. STD does not stand for sexually transmitted diseases. In audit strategy, it stands for scope, timing, and direction of the audit. So NT, you can see here again, I'm repeating, nature, timing, and the extent of audit work. This refers to how the audit procedures will be performed. Nature. This is about what kind of procedures will be carried out. This is about what kind of procedures will be carried out. Nature. What kind of audit procedures will be carried out? Are we going to do substantive procedures? If we don't trust the controls that the company has put in place, then we go it the whole road. We do substantial work. We do substantive procedures. And substantive procedures are also known as test of details. Or are we just going to do control testing? And the moment we are satisfied that the controls are good, then we do less of these substantive procedures. And when we talk of this nature, what I always remember is this concept of RAEOU, the substantive test. RAEOU. R is analytical procedures. A is inquiries and third-party confirmations. I is inspection. We have, ladies and gentlemen, O is observation. And then we have U for recalculation here. We shall be looking at this later. But basically, when we talk of nature of our audit procedures, we are looking at what type of audit procedures shall we carry out? And then we look at the timing. So the timing, ladies and gentlemen, we're asking ourselves, we as auditors, as Ahura & Co., when will we go to this XYZ firm? Yeah. So this refers to when the audit work will be carried. Considerations, will interim procedures be performed before the year end? Remember, there are those institutions that you have to do interim and final audits. Interim will be at the middle of the year or around September if it's year ending December. Yeah, within the year, you can move in and do some interim procedures, and then you come and do the final audit at the year end or after the year end. So when are you going to execute your audit procedures? Will the testing be done at the year end or after? And what are the deadlines for reporting to stakeholders? Extent, ladies and gentlemen, we are here to dig. So these procedures, we can either dig through them just at the very top without getting really deep when we are getting our audit evidence. Yeah, because we're required in this case to be very, very skeptical. Skepticism is about having a doubting mind, having a questioning mind, right? Yeah. Yeah, so to what extent? So this is about how much audit work will be done. Factors in influencing this include the level of assessed risk. I told you the assessment of risk, internal controls, plus in this case here, these the control risk plus the inherent risk. If it is a high risk, then just appreciate that the extent will be big, will be very deep. You must excavate more down and down and down and down. The volume of transactions, if you're dealing with a company like Safaricom in Kenya, which is a voluminous company, then you expect to have your audit procedures, mowing down, moving down further. Then, of course, if the accounts are complex, we have to really go into a bigger extent as we do audit. And we have given a very good example. For a company with weak internal controls, we are auditing XYZ, we have evaluated the internal controls, we realize they are weak. If they are weak, then I will not place reliance on them. It means I'll have to do a lot of work. This is a risky company. The nature of the audit work may involve extensive substantive testing. The timing might be mostly year-end, and the extent will be high due to greater what year? Greater risk. So you can see in this case here, this concept of NTE, nature, substantive test will have to be done. Timing, year-end. And the extent will be high. I have to get deep here. Due to what year? Due to greater risk. And then number 2, ladies and gentlemen, we have the concept of STD. STD, we are scoping the work. We are also going to look at the timing when these particular procedures will be dealt with, will be used, and then the direction of the audit. How do we direct the audit? How do we supervise the audit? How do we lead the team? These elements are similar but more strategic and engagement focused, often used to coordinate and communicate the bigger picture scope. What areas will be audited and to what extent? This includes if it's a subsidiary, which subsidiary, or rather a group of companies, which subsidiaries will be covered? Which locations are we going to go? Like currently, ladies and gentlemen, we are auditing KMPDU. Our and the company is auditing Kenya Medical Practitioners Board. These guys have got 10 branches in Kenya, all right? I mean, remember in audit, you don't have to go to like all the branches, no. So we must make a decision at this strategic level when I'm doing the audit strategy. So which components are material? When we talk of group, when you should be doing group audit, you'll be able to understand what we call the concept of what are components. It's not all components that are material. Which standards and the frameworks to apply? Are we going to use IFRS for the private sector, or is this a public listed company? And if it is the case, then I shall be able to use IPSAS, International Public Sector Accounting what year standards. So timing, here the focus is broader. When will planning be done? When will we have a field work? After field work, the senior management at the audit firm, the audit partners, would need to review. And when will this reporting happen? Are there any deadlines? Remember, we don't just audit like forever. We must be having deadlines or regulatory filing dates. Direction. Now direction, STD, D for direction. This is about guiding the audit team. This is now more of leadership. Yeah, advise them on areas to focus on, e.g. high-risk areas. If there are new transactions, that is where you go. How to allocate responsibilities among the team members, whether to involve experts, e.g. actuaries, IT auditors, how to supervise and review the work. Example, the audit of a multinational group may involve different audit teams across countries. The strategy must define the scope, which subsidiaries to audit, the timing, consolidation deadlines. By this date, you guys should have cleared consolidations. You should have cleared closing your books and the direction, lead auditor's role, coordination of component auditors. So summary table, acronym NTE. The focus for this as pertains audit strategy is which procedures are we going to apply? The nature, which procedures are we going to apply? What kind of work, when and how much to perform? How much is the extent? STD, the strategic scope and the guidance of the team, where to focus, when to act because of time, and how to lead the audit team. These components help define the strategic focus of the audit. For example, it determines whether the auditor will focus more on test of details or analytical procedures, depending on the assessed risks, available evidence. Then we go to detailed. Remember, under planning, audit planning, we've got 2 key documents. Which documents are these? We have the audit strategy on top. Yeah, the general one, the overall one. And then we have what we call a detailed audit plan. A detailed audit plan. Now, this one, of course, is quite intense. We do this often at our firm. Whenever we get an engagement, audit engagement, we must always do this. And what I normally see every day, because being the managing partner, my role is not really like day to day. No, there are people who are doing that. We also have other partners, ladies and gentlemen, who are able to review. Mine will only come at the signing of the report when I'll be able to look at a few things here and there. But what I normally see these gentlemen doing every day, they're only gentlemen at the top. I need to style up and bring in, although our audit senior is a lady, Now, ladies and gentlemen, what I normally see them doing in this detailed audit plan document, they will basically do like what the audit strategy has. Yeah, it's like now you pull all this down. But now here you get into what we call granularity, granules, small details. Get in this case here to define the engagement structure. Who is the engagement partner for this audit client? Who will go with him? Which seniors? Which audit manager? Which in this case, audit juniors? Yeah, who will work with this guy? And within this team, we must be able to allocate responsibilities. Now we are doing a detailed audit plan. We should be able to know Mr. A will be the one auditing the property, plant, and equipment. Mr. B, because if you don't do that, when they go to the ground, when they're on the field work, then there'll be a lot of confusion. They may not be able to deliver. They'll start fighting at the client premises. You have to really give like descriptions about what each one of them will be doing, including minor details like budgets. You want to know like how much will this cost? Have it down there. A detailed audit plan. A detailed audit plan. Here you have to know like which audit procedures will be performed, by who, by when, and what will be the time to be consumed. Because at the end of the day, if it's an audit plan, then you need what we call a Gantt, Ganth, a Gantt chart, a Gantt chart. Showing in this case here, like when will the audit procedures be done? And then of course, when do we expect the overall audit to be done, what yet to be complete? So whenever we hear of audit detailed plan, ladies and gentlemen, this is what I want you to always remember. Detailed audit plan. This plan is more specific and granular. It outlines who will perform the audit work, what procedures will be performed, when each task will be completed, how each procedure will be executed. It also includes a breakdown of budgeted time and resources for each task. It includes a breakdown of budgeted time and resources for each task. This is distinct from the broader strategy document and ensures proper allocation of tasks and resources. Importance of ISA 300 and ISA 315. Audit planning is mandated by ISA 300, which emphasizes that audits must be planned appropriately. However, ISA 315 is particularly critical as it focuses on identifying and assessing the risk of material misstatements through understanding the entity. ISA 315, you must understand your entity very well before you start auditing. Before you start going to the execution stage, you must understand your entity at the planning stage. So before auditors can design effective audit procedures, they must understand the client's environment and risks. ISA 315 helps assess, number one, the industry that this client is operating in. Yeah, and because that will be beyond your control, then that will be inherent risk. The nature of the entity. Is it a school business? If it's a school business, what are some of the kind of business risks affect schools? Then we have the objectives and strategies. I have to understand here, what are their key strategies? This may be able to expose operational risks. And we're going to see this in detail. This is a whole chapter ahead of you guys. The entity's internal control system I will have to understand, do they have control systems here? And then, of course, we have number 5, the entity's financial performance, essential for identifying financial anomalies or pressures that will lead to misstatements. Understanding these areas ensures that the audit is well targeted and effective, which now brings me to what we call fraud risk, which will be the last thing in this chapter, lesson number 6. So fraud risk. Fraud is a significant area in audit, and auditors must understand their role in detecting and responding to fraud. Definition of fraud. Fraud is defined as the intentional act. Yeah, you know, when it is unintentional, it becomes an error. But when it is intentional, when the misstatement is intentional, then that becomes what here? A fraud. An intentional act by one or more individuals among management, those charged with governance, employees, or third parties, involving the use of deception to obtain unjust or illegal advantage. So, for example, when you do what we call creative accounting, you create fake profits which do not exist. So you overstate your revenues, you understate your expenses to create some profit that don't exist. You want, for example, to obtain loans from a bank unjustifiably. You are deceiving. You are a fraudster. Yeah, yeah, great. Now, ladies and gentlemen, please listen and listen to me very well. Listen and listen to me very well. So we have here, fraud involves two main elements: deception, where you are cheating, or this illegal or unjust gain. Type of fraud, there are two of them, but as auditors, we always go for this misrepresentation. Yeah, we have fraudulent financial reporting. This includes deliberate manipulation of financial statements to mislead users, e.g., overstating assets or revenues. So remember, this is also known as window dressing or creative accounting. Window dressing. Ladies and gentlemen, you could be having a house. Inside your house, the house may not even be very beautiful, but you go to Dubai and then you buy very executive curtains. Yeah, and then you dress your house. Somebody seeing from outside, they'll say that person is living in some kind of heaven. But you inside, ladies and gentlemen, you know nothing. It's called window dressing. You can also window dress your financial statements like that to show that, everything inside the farm is very good, but for sure, perhaps there is nothing happening there. Nothing happening there. Then we have misappropriation of assets. This refers to theft or misuse of the company's assets, e.g., employees stealing inventory or funds. While both are serious, auditors focus primarily on fraudulent financial reporting. Primarily, that's what we focus on. Misrepresentation, though misappropriation must also be addressed if identified. Auditor's responsibility, ISA 240. You don't have to cram these ISAs. No, don't cram them. What you need is the knowledge. Per ISA 240, the auditor's responsibilities relating to fraud, auditors are not primarily responsible for detection of fraud. That responsibility lies with management and those charged with governance. Ladies and gentlemen, remember, when we are getting into auditing, we as auditors must always insist on an engagement letter. In that engagement letter, which is a contract between ourselves and the client, we shall be able to have a section on responsibilities. So I'll be able to detail the responsibilities of the client, management, and the responsibilities of the auditor, my responsibilities. The auditor's primary responsibility is to give an opinion, is to give an opinion. That is the primary responsibility of an auditor. It is to provide an opinion on the financial statements as to whether those financial statements are okay or otherwise. Detection of fraud to me as an auditor is a secondary exercise. I know the audit procedures that I'll be able to put in place as I gather my audit evidence. There is a very high likelihood I may be able to detect fraud. And then should I detect it, then I should be able to do what here? I should be able to, in this case here, report. Bring that fraud to the attention of management or to the attention of what here? Statutory authorities. Now remember, fraud detection is not my primary thing. To me, fraud detection is secondary. Fraud detection, making of financial statements, etc., those are primary responsibilities of management of the client firm. Of the client firm, of the client firm, of the client firm, of the client firm. All right, we shall overcome. Now, ladies and gentlemen, please listen. We are told here the auditor's responsibilities relating to fraud. Auditors are not primarily responsible for detecting fraud. That responsibility lies with management and those charged with governance. However, auditors must plan and perform audits to obtain reasonable assurance that the financial statements are free from material misstatement, whether due to fraud or error. Therefore, while auditors don't specifically search for fraud, they must design procedures that are capable of detecting material misstatements regardless of the source. And if they suspect or detect fraud, then the auditor must report it immediately to the management, or those charged with governance, the board of directors or the audit committee. Consider legal implications before reporting externally, because, ladies and gentlemen, I can easily come and get a situation where these people are engaging in fraud, which we call public interest fraud. Yeah, so I've discovered some criminality here, which I feel this one must be reported. But if I'm going to report externally, then I must consider legal implications, because ACCA or ISPA Code of Ethics requires us always to exercise confidentiality. Document findings, we must do a report and evaluate their implications for the audit, especially how will this affect my opinion. Then now we go to what we call professional skepticism. Professional skepticism. Remember, skeptical. You are skeptical when you fear. You are skeptical in this case here when you are asking so many questions. Skepticism is all about having doubts, having a questioning mind. And that is what we send auditors outside there to do. Because if I send you, for example, to Mombasa to go and do audit, and then when you come back to the office, our office, which is based at Havens Court, yeah, Westlands, yeah, that's Aura and Core. So I've sent an audit senior to go outside there. And then when she comes back, she comes with the working papers that are just like this. Yeah. Then I'll know straight away that this person was not even meant to be an auditor. Because an auditor should be able to query, director, you are telling me in this case that sales were this much. Please send me an email confirming what you have told me. That's our working paper. Now, if sales were this much, how about receivables? How are they receivables like this? Document that again, send it to me. An email, could you kindly allow me to speak to the receivables? Because I would want to do what we call receivable circularization, circulate. So when all those guys respond to me as an auditor, having been given permission by my client, then all those documents are getting into my file. But now remember, I can only be able to reach such kind of a level if I'm very doubtful, especially doubtful of whatever that I'm being given by inside stakeholders. Whenever inside stakeholders tell me this and this and this, I should be able to take that with some pinch of some salt. Don't take that for gospel truth. No, you'll still need to dig and get even more from outside there. Get even more from outside there. Get even more from outside there. So professional skepticism. Professional skepticism. Under professional skepticism, auditors must always exercise professional skepticism, meaning they should question the reliability of evidence provided. They should remain alert to inconsistencies and possible misstatements, avoid assuming management's integrity without sufficient evidence. Yeah, they should never cheat you that they are people of integrity. Just avoid. Being skeptical ensures that auditors don't overlook potential red flags simply due to trust or familiarity with the client. Summary, ladies and gentlemen, audit planning revolves around understanding audit risks and designing procedures to manage detection risk appropriately. This is structured through audit strategy, which is a broad overview, and a detailed audit plan, specific, actionable tasks. ISA 315 is central to this process, emphasizing the need to understand the entity and its environment. Regarding fraud, while detection is not the auditor's primary duty, they must be vigilant and design procedures that will uncover material misstatements regardless of the cause, So, ladies and gentlemen, that marks the end of lesson number 6. I'm looking forward to meeting you again in the afternoon for lesson number 7. It's my hope that you enjoyed the session.